JD Vance's new interview, he's talking about how important crypto is going to be to our financial system and the days ahead. We also are going to look at what's going on with quantitative easing. The government is about to print money. What is that going to mean for the crypto market and the economy in general? I want to cover that. We also have some other news about Europe and XRP. Let's just get right into this here.
Crypto speech was a big hit. And I know a lot of smart people love crypto. I know some smart people actually have reservations about it. For our audience, can you just kind of make the case for crypto and people who have, concerns and quite frankly don't even understand it? There are a lot of folks out there. I know a lot of people own it, but.
Yeah. So look, I'm an owner of Bitcoin here, but I'm also the vice president of the United States. So I want to be careful, but I think the core value proposition of cryptocurrency is that it's a way of transacting and a way of storing value in a modern digital age. Look, 100 years ago, if you wanted to go and buy something, you put a dollar bill on the table, you put a gold coin on the table. The value proposition of Bitcoin is that it can serve the same function, but in a digital age, a way that's secure, that's safer from fraud, that allows people to buy and sell and store value, but in a way that's consistent with the modern technological age that we live in. Now, having said that, I fully accept there are risks to all of these things. There are always risks to new technologies. Our approach in the Trump administration is to say, let people innovate. Let people figure this stuff out on their own. If the critics of Bitcoin are right, I happen to think that they're wrong. That will eventually win out in the marketplace. If the advocates of Bitcoin are right, and I happen to agree with them, if they make their case, that's eventually going to win out in the marketplace. What you shouldn't have is a dictatorial government that tells certain industries they're not allowed to do what they need to do. You've got to let people make these decisions on their own, and that's sort of been our approach. We want common sense regulatory regimes. We want to allow the cryptocurrency industry to participate in the mainstream of the economy. But then ultimately, the laws of economics, the laws of supply and demand are going to make the determinations from there.
And remember, Bitcoin is the greatest distraction to this digital transformation. They all want people focused on Bitcoin because the other technology, your XRPs, your Stellars, your Chainlinks of the world, that is the new infrastructure for this entire system. And that's where I believe the most value will live and be transacted on. This is why I talk to you so much about XRP. Been in the crypto space for over 5 years here. I do this 12 to 14 hours a day. I've looked at every single thing that there is in the crypto industry. And I believe XRP is my greatest chance for generational wealth in a very short time here over the next few years. And XRP volume is up across the board. Volume is red across the board except XRP. So people are still getting out of Bitcoin, Ethereum, people are selling Solana, but institutional money is coming into XRP. We've already seen over $1 billion into spot XRP ETFs in under 3 weeks. What do you think this is going to do 6 weeks, 18 weeks out from now? There's only so much XRP supply. And once we go through it, they have to go to the exchanges. Once that is depleted, only people that are going to sell are the retail investors and of course some institutional whales. After that, I mean, you really don't have enough XRP. There's 2 to maybe 3 million people in the world that own XRP out of 8 billion, right? It's not. When people honestly find out what this technology is going to do and how it's going to transform the financial system, it'll be too late for those people. They'll be buying XRP at $10, $50, $100, right? You can buy 1,000 XRP right now for $2,000. XRP goes to $10,000. You can only buy 1,000 XRP for $10,000. You see how that goes? If it goes to 20,000, you get the picture. All right, here is what's happening in the EU with XRP and the European ledger.
Europe just made a big move on crypto. XRP, Stellar, and Algorand just got officially integrated into Europe's unified digital ledger. And I think that's a very bullish sign for crypto because Europe is finally warming up to it. The world's most aggressively regulated financial region now wants to plug blockchains directly into their settlement infrastructure.
Oh, I'm so sorry.
So let's break down what this means for crypto and where Europe is heading. So what actually happened? The European ledger is essentially Europe's unified digital asset infrastructure that is currently being built and tested. And now XRP, Stellar, and Algorand have been verified and listed on it. So with crypto becoming more and more mainstream, it's basically the EU's attempt to future-proof and revolutionize its entire financial system. The plan is to tokenize central bank money, commercial bank money, financial instruments, and other digital assets onto onto one shared decentralized platform. So why did they pick XRP, Stellar, and Algorand? Well, each chain fills a real, boring, unsexy role that regulators love. XRP is the payments and settlement chain. So, of course, they would be a logical pick for the EU ledger. They've got a decade of operations under their belt, and say what you want about the XRP army, but they went to court, they won, and they are one of the safest bets for institutions to settle payments on. And Stellar is in the same wheelhouse. They power borderless payments, asset tokenization, and DeFi, of course. And for institutions, they offer payment system at a global scale. Algorand was also built for tokenization. They've got the high throughput, low fees, they're ultra scalable, and they're known to be an RWA chain. So these three are exactly the kind of public chain they would want. And I think this is a big deal because this is one of the first times a major region is openly acknowledging public chain assets inside a regulated financial infrastructure. And that puts XRP, Stellar, and Algorand in front of institutions in a way we haven't really seen before. They'll have a direct path into Europe's future payment stack when it comes to fast money transfers, cross-border payments, and a push of tokenized assets into regulated markets. And if this works, we can expect other regions to copy the model.
And we can expect other regions to copy the model. You notice how XRP is ready to go in the UK, ready to go here in the US, ready to go in Japan, ready to go in the Middle East, ready to go in Africa. Anywhere you look around the world, Ripple and XRP are ready. Singapore even, right? Southeast Asia. I did a complete breakdown and video about the European ledger. If you're interested, it was put out 2 days ago. It's got 22,000 views. I get into all of the nitty gritty details that you want to know. That video is right here. All right. And then of course, just a little bit more. It was based on this XRP, XLM, Algorand European ledger post. Like I said, if you want more information on this, please go watch this full length video that I spent a lot of time putting that together. All right, now let's figure out, we just got done with quantitative tightening. That ended December 1st. Now they're going to be turning the money back on, but what is that going to mean for our portfolios? Let's go ahead and explore this a little bit deeper.
I think ending on December 1st is historic. And it was well telegraphed, so no one should be surprised that it ended. But I think it's historic because in a way, it really signals the beginning of a new era of what the role of the Fed is in the monetary policy toolkits it's been able to build upon since. So we used to call the Fed the lender of last resort. And I think what we're now going to have to admit is with the adoption of the standing repo facility that's been put in place during the key era or thereafter, where it is essentially now the lender of continuous resort. Right? I mean, just yesterday on December 1st, it was tapped for close to $14 billion, like for liquidity purposes. Like the day it ended, the Fed just intervened. It used to be a big deal. And now the Fed just intervenes every day. So the role of monetary policy that is now being conducted in this regime, which is basically what when Fed governors talk about the ample reserve system is, like this is the future of the Fed. We don't want to go back to a scarce reserve system. We're not going to be in an abundant reserve system, but we're in this now ample reserve system where we have now believed that $6 trillion is like the right amount of balance sheet capital for the Fed to be maintaining and actually having unlimited capital on standby upon the request of the banks. And that means you're basically muting the possibility of there ever being like a financial crisis. You're muting price discovery and liquidity discovery. And so, yeah, I think QT ending alongside having the standing repo facility in place is a totally new regime. And this should matter to most investors because historically, those who have looked at the Fed acting as a lender of last resort to step in when there's tremendous volatility in the market, the structure that we have now inherited is that we may not really see that kind of volatility again. Like something will break differently. And it will have to break, I think, much more astronomically because of the capacity for what this means. And in that sense, it doesn't surprise me that the equity market will continue to go up. If you really think the whole play for a while was you needed the equity market to kind of participate in price action where you saw liquidity breaks, like we're just going to see less of these liquidity events.
Does Bitcoin go up because QT ended?
I think Bitcoin will go up when there's another acronym that comes out of the Scrabble board that the Fed has to rediscover to create a new emergency and intervention program. And I think part of why QT ending is a good deal is because now everyone can go back to the drawing board and figure out what the next thing is going to break.
Remember, Ripple XRP is plugged into the repo market. They clear about $2 to $8 trillion a day out of that system. They're primed and ready for anything that happens now. Quantitative easing, QE, usually means easier financial conditions. higher asset prices, and more liquidity into the system. But over time, it can feed inflation bubbles and sharper downturns. QE is when the Federal Reserve creates bank reserves and uses them to buy large amounts of treasuries and other securities like MBS. Once policy rates are already near zero, those purchases push long-term yields down, inject liquidity into the banking system, and encourage investors to rotate into riskier assets to earn a return. Typical effects on the US economy: lower long-term rates reduce borrowing costs for mortgages, corporate debt, and government financing, which tends to support growth and lower unemployment in the short term. At the same time, the extra liquidity and richer asset valuations can contribute to higher inflation, especially in the housing and other interest rate sensitive sectors. Over multiple years, repeated QE rounds can lead to asset price inflation, meaning financial and real assets rise faster than underlying productivity, increasing inequality and risk of misallocation of capital. Typical effects on the stock market here: by driving bond yields lower, QE makes dividends and earnings from equities look relatively more attractive, so flows often chase stocks and push indices higher. Impractical work of the US QE rounds finds that lower discount rates and improved liquidity materially raise stock prices, in part via wealth effect and consumer spending. QE, and this is how it affects crypto, QE adds dollar liquidity and suppresses yields across traditional assets, which can increase the demand for alternative and higher beta plays like Bitcoin and other crypto assets via portfolio rebalancing channels. Studies looking at the US and ECB QE shocks find that announcements and liquidity waves can have statistically significant positive impact on Bitcoin and Ethereum prices, largely through investor sentiment and hedging diversification demand. Obviously, Bitcoin, Ethereum, XRP, Solana, all that stuff. However, the link is not mechanical. In some episodes, QE or its coincide with crypto drawdowns when macro expectations or risk sentiment deteriorated, showing that the narrative positioning matter as much as raw liquidity. So personally, the Fed's going to be dropping rates here. There's going to be a new Fed. Jerome Powell is going to be replaced early 2026. Trump is going to put in his guy in there, and they'll probably drop rates all the way to like 1 or 2%. I would imagine it'll go down pretty quickly. You will be dealing with higher inflation, and so we're kind of kicking the can down the road here. I'd imagine that markets will pump when this happens, but of course, what goes up will eventually come down. And so I am just preparing for that, because what you're seeing right now, why are they lowering rates? Well, here is the job losses over the last few months here. US government, 307,000 employees, UPS, 48,000, Amazon, 30,000, Intel, 24, Nestle, 16, Verizon, 15, Accenture, 11,000, Ford, 11,000. You can see that a lot of people are hitting the unemployment line, and these are usually higher paying jobs as well. So the market is looking a little skittish right now. Just be careful. This is why I am putting more money into XRP and a few other crypto assets, because I think this is going to help pump those prices in the short term. All right, Gen Z is already on chain. This is the reason why all of these financial institutions are getting into tokenization. They know the younger generation is more interested in crypto and those communities rather than the traditional stock market. So what do they need to do? They need to put all of their traditional offers into where these younger generations are investing. And that's why all of this tokenization is happening and value is moving on chain.
More Gen Z owns crypto than stock. So I think we just need to make sure that, this is where it's going. They're digital first. Blockchain can solve that for them, and we can help people get in the game.
Yeah, I think y'all are way ahead. Is there anybody else out there in the market doing something similar that you guys have seen? Because I haven't seen anybody else that's being quite as innovative as you guys.
I think people are trying, right? I think everybody is looking at how to serve this market. I think if you don't have a close relationship with the community, just like, Uphold and XRP, right? Never delisted. We talk with our XRP holders on a regular basis.
Uphold does have a lot of programs for XRP holders. If you haven't taken a look at my video I made on Uphold and my strategy that I'm going to use to earn extra XRP per month, please go do that. All right. And then, are the Riddlers correct here? Paul Atkins rings the bell, right? He just did this, New York Stock Exchange. Vanguard ship has sailed, right? Vanguard enters the ETF market. Merry Christmas on the bell. Bearable Guy decoded December 17th to December 23rd. We return to Saturn 888 days from the XRP lawsuit, July 13th, 2023. The first day of Saturn, December 17th, 2025. Is there big things expected ahead? That is what a lot of people are predicting. I'm Crypto Sensei, guys. Have a great weekend. Thank you for being here. I hope you are learning about the crypto market in general and the economy. We want to cover all of these things because they do affect each other. Thank you so much. See ya.